What is a REIT, Real Estate Investment Trust? Imagine owning a piece of a massive multi-million-dollar shopping mall, a luxury apartment complex, or a state-of-the-art data center, all without ever having to deal with a leaky toilet, a demanding tenant, or a massive bank mortgage. That is the power of a REIT. It is essentially the stock market's answer to real estate investing, allowing everyday investors to pool their money and buy into large-scale income-producing property portfolios. But how does it actually work? Think of a REIT exactly like a mutual fund or an ETF, but instead of buying shares of tech companies or car manufacturers, the fund buys real estate. Companies that operate as REITs buy, manage, and rent out these massive properties. Because these shares are publicly traded on major stock exchanges, you can buy or sell them instantly during the trading day, just like a regular stock. But here's where it gets really interesting from your wallet. By law, to maintain their highly favorable tax status, REITs are required to distribute a massive portion of their taxable income directly back to their shareholders. In many jurisdictions, that means handing over 90% of their rental profits. Instead of waiting years for a property to appreciate in value to see a return, you get a regular, consistent cash flow through dividends. This structure unlocks three massive advantages for the average investor. First, accessibility. You don't need a $100,000 down payment. If you have enough money to buy a single share, you are officially a real estate investor. Second, instant diversification. Instead of putting all your eggs into one local rental house, a single REIT share can give you fractional ownership across hundreds of properties nationwide. Third, true liquidity. If you own physical real estate and need cash fast, selling a building takes months. With a REIT, you can click sell on your brokerage account and have your money settled in seconds. So while traditional property investment requires massive capital, hands-on management, illiquid assets, and significant debt, REITs completely flip the script. They turn a notoriously illiquid, management-intensive asset class into a hands-off, highly liquid, dividend-paying stock. You get the passive income streams, the institutional-grade diversification, and the corporate-backed security, all managed by industry professionals while you collect the checks. This seamless blend of stock market liquidity and hands-off corporate management is exactly what distinguishes a REIT from other forms of real estate ownership. Thank you.